Welcome back. We talked about China's deflation earlier, or lack of. We're joined now by Anthony Chan, former chief economist, JP Morgan Chase. Good to have you back on the show. Joining us from Nashville, Tennessee. I said earlier that it's good news for consumers, which I think it is, but I know it's not great news for the economy or businesses as a whole, right?
That's right. What we're seeing is that the lower inflation is also a reflection of slower economic growth. You also have to realize that we're seeing global central banks all over the world basically trying to tighten or reduce liquidity. That leads to slower economic growth. That explains why China also had softer exports to the rest of the world. China is also growing a little slower because of the policies that it's undertaken to protect its people, and that's a laudable goal. But in short, inflation typically grows slower when economic growth is not as robust.
The COVID issue that you mentioned, we're speaking, of course, of the lockdowns and the disruptions that it's had on supply chains. A number of experts have sort of surmised, if you will, that policy might be mitigated or might be adjusted as the months go on as we get into 2023. Is that going to be potentially a catalyst as they begin to open up or focus more on the business development aspect of it rather than the lockdowns themselves? Or is it hard to get to the second step without fixing the first one?
No, I really think that an easing of the COVID zero policy and moving towards the dynamic COVID strategy that has been announced certainly will be a step in the right direction. We're also seeing that China has continued to offer stimulus to the economy, and they have the space to do that because, Phil, as you know, the Chinese government did not add as much stimulus to the economy during the early stages of the pandemic. So they're coming in a little bit later, and that's certainly going to help. I recently completed some research looking at the U.S. Economy, and I find that when you see slower economic growth or a recession, which we're going to probably see in the United States sometime next year, that inflation does decelerate by about 1.2% from the beginning of a recession towards the end. So slower economic growth or recession, which I don't anticipate for China, does slow the inflation rate. And in the case of China, because they have such an important export component, if the rest of the world and the U.S. is slowing, that in turn will slow Chinese economic growth and slow inflation pressures.
Right, and we see that in the stock markets, right, around the world. I mean, obviously, China is not immune to what we're seeing in terms of the drop in equity markets. You have spent a lifetime advising people where to put their money. You essentially help people make money by placing their money in the right place at the right time. So with respect to China, should investors put their money in China, and if so, where?
Well, I think that right now there are opportunities in China, great opportunities. For example, we're seeing the Chinese government talk about trying to encourage small businesses, small and medium-sized businesses to get going. And that in turn will stimulate consumer spending and stimulate small and medium-sized companies, so that if you invest in many of these new disruptive industries or companies that have the potential to growth in China, I think you'll have a much better opportunity. They're going to be watching to make sure that technology and other industries that are large grow in the right at the right pace, and that they grow in a manner that the Chinese government agrees with. So maybe those industries are not as exciting for investors, but let's face it, China is going to also work very hard to become greener, to become a lot cleaner in the sense towards climate change. So I'm talking about the electrical vehicles. I'm talking about making the climate a lot cleaner in China. So those type of industries are very exciting from an investment point of view moving forward, since they're going to receive a lot of encouragement from the Chinese central government.
One of the topics that we've spoken a lot about is the supply chain constraints as it relates to China. And I know there are a ton of factors here, but stay with me. To make a country great, you have to have innovation. You have to have people moving around. You have to have travel. and we're now at the beginning of potentially having more of that. But doesn't travel have to be opened up as part of the first spigot to get things back to normal again?
Absolutely, we need to see that, and we are going to see that eventually. I think China is already moving in that direction. I was very encouraged by the fact that they're going to permit Western vaccines for foreign individuals living in China or visiting in China, and I hope to see that that will expand to the rest of the population. I was very excited about the fact that if that spreads to your the more vulnerable community, individuals that are over the age of 80 to have vaccines, whether it be the Western vaccine or whether it be the Chinese vaccine, all that will be encouraging because it will allow China to open up a lot quicker and get faster economic growth. With regard to the supply chain, Phil, I'm very excited with the fact that when you look at global supply chain indices, the New York Fed certainly puts one out. They're all starting to show that we're seeing less bottlenecks and that the costs are going down, all consistent with lower inflation. And lower inflation will mean that businesses will be able to get back towards producing more goods and be less worried about these supply chain disruptions that clearly have been an impediment to economic growth, not only in China, but all over the world. That is starting to ease. And we see that also in the manufacturing indices, the so-called ISM surveys. When you look at supplier delivery indices, they're all showing some encouraging developments in that direction.
I have a feeling, Anthony, that you'll have an opportunity to go to China very, very soon at the rate things are going. Thank you.